It's all covered in today's China Truths.
Yes, I want to withdraw 200,000 yuan, but I can't. Anything over 50,000 requires an appointment. I made one. They told me to come today. Then they asked, "What's the purpose of your withdrawal? You need to prove it. Also, prove your money is legal. Otherwise, no withdrawal." Seriously? When I deposit, you're all smiles. When I withdraw, it's a full interrogation. What's the purpose of your withdrawal? I want to take it across the street to another bank. Why? Same interest rate, but their tellers don't talk nonsense like you do. They don't open only one of 4 windows and make people queue all morning. Just remember, if you have money, don't keep it in the bank, or they'll treat you like a fool. Just now, a friend transferred 5,000 yuan to me, but I couldn't withdraw it. My bank card was blocked. I asked why I couldn't take out money that someone else sent me. They said I had to prove the relationship. So if my father transferred money, do I need to prove I'm his son? Bank of China, such a massive institution, yet I can't even get my own money. What's going on? Lately, more and more people are facing absurd restrictions when making simple withdrawals or transfers. What's the real reason? What's wrong with China's banking system? Today, we'll dig into the deeper problems behind this mess, take you inside the banks, and reveal the truth. I went to the bank to withdraw 300,000 yuan. The teller asked if I had an appointment. I said yes. After checking the system, he asked why I needed so much cash. I said it was for salaries. He got excited. "We can pay them for you!" I refused, but he kept pushing, saying it only costs 300 yuan and saves time. I explained we only had 10 people and didn't need it. He kept insisting. I got annoyed and said, "My boss asked me to get cash. If I go back and say we lost 300 yuan in fees, how do I explain that? It's a bonus. People want to hold it in their hands." I made an appointment to withdraw cash, not to hear sales pitches. His attitude changed immediately. He stopped talking and processed it with a cold face. I went to withdraw money, but they refused. I'm waiting on this money to save a life. My dad is in a coma. Yet the bank told me they needed my dad's confirmation. How? He's unconscious. Several people called on my behalf, but they still wouldn't release the funds. My dad's life is hanging by a thread, and I can't get our own money. This is the postal bank. Only a handful of staff are even making calls. I have all my dad's medical records right here, but they still won't budge. This is how the postal bank treats people in crisis. This morning, I went to the Bank of China. I didn't even try to withdraw a large amount, just a few thousand yuan. But the ATM said the amount exceeded the limit. I asked the staff what was going on. They asked how much I wanted. I said 4,000. They said I couldn't withdraw that much. Why? Your card is under protection, they said. Now it can only withdraw 2,000 yuan per month and 2,000 per day. I was shocked. How do I fix this? Why can I deposit without limits but withdraw with restrictions? I can deposit 80,000 a day but only take out 2,000. So my money is trapped? I went to the counter, took a number. I was number 23. 23 people just to withdraw cash and only 2 open windows. The most powerful bank in the world isn't in the US. It's right here in China. Chinese banks can control your money however they want. They decide how you use your own money. You must comply. They decide how much you can withdraw, when, and why. Do you accept this? Lately, countless bank cards have been locked from transferring money. Banks say it's to protect your property. For your safety, they say, they've restricted over-the-counter transactions. So overnight, a nationwide transfer cap was rolled out. Some banks limit a single account to just 1,000, some to 5,000, or 10,000, or 50,000. The caps vary from place to place. But here's the real problem. China's economy is already struggling, and now banks are choking the flow of funds. If money can't move, do you expect growth? Or are we turning the entire system into a stagnant pool? China's deposit interest rates fall below 1%. Depositors wonder, should we still keep our money in the bank? Recently, many banks in China have lowered their deposit interest rates, particularly for one-year fixed-term deposits, which have now fallen below 1%, sparking heated discussions among depositors. This marks the seventh deposit rate cut since mid-2022. As the once principal and interest-guaranteed bank deposit returns enter the 1% era, many depositors are growing restless and starting to question, is it still worth keeping money in the bank? This shift is also having a profound impact on bank operations. On May 20th, China's six major state-owned banks, ICBC, ABC, BOC, CCB, BOCOM, and Postal Savings Bank, announced reductions in their listed deposit rates. After the adjustment, the interest rate for demand deposits at these banks dropped to 0.05%, and the one-year fixed-term deposit rate fell to 0.95%. A wave of joint stock commercial banks and local small and medium-sized banks quickly followed suit with similar rate cuts. According to a June 16th report by China Economic Weekly, this is the seventh time deposit rates have been lowered since mid-2022. As the returns on principal and interest-guaranteed deposit products enter the 1% era, many depositors lament that the days of easily lying down and earning interest are over. Beijing resident Wang Hong said, "Keeping money in the bank, the interest just isn't cutting it anymore. Back when the annual rate was 4%, the yearly interest on 5 million yuan was enough to support an entire family. Now, with just 1% annually, interest alone is no longer sufficient." As deposits become less attractive, many people are left wondering, where else can they put their money? Still, many believe that keeping money in the bank is the safest option. Li, a depositor from Shanxi, said she would continue saving at the bank. "People like me save for security." A significant number of people still choose to save in banks. According to financial statistics from the People's Bank of China in April, household deposits increased by 7.83 trillion yuan in the first 4 months of this year. For others, bank deposits alone no longer meet their financial needs. Wang Hong admitted that the large denomination certificate of deposit he secured 5 years ago is about to mature, and he hasn't decided what to buy next. "Maybe I'll go for one of those treasure products, daily treasure, weekly treasure, monthly treasure, or whatever." More and more restless depositors are now turning their attention to the wealth management market. As interest rates decline, the price comparison effect is becoming increasingly pronounced. Many people are now turning their attention to insurance products. Insurance broker Lin Nan explained, "Annuity insurance and participating whole life insurance have become popular options for long-term retirement planning, thanks to their ability to lock in returns." The younger generation's approach to financial management is also quietly changing. According to data from the Ant Fortune platform, as of the end of April, 937 million investors born in the 1990s and 2000s had allocated assets into money market funds, bond funds, and gold funds, collectively referred to as the new three golds. However, whether it's investing in wealth management products, insurance, or betting on the new three golds, these options all carry higher risks than traditional bank deposits. For ordinary people used to saving money for stability, this shift is not an easy one. Wang Yifeng, chief financial industry analyst at Everbright Securities, noted, "The so-called 1% era or 2% era of deposit interest rates is more of a psychological threshold. The decline in deposit interest rates not only affects the wallets of depositors, but also profoundly impacts banks' operations. The net interest margin, the difference between the average yield on interest-earning assets and the average cost of interest-bearing liabilities, is a key indicator of a bank's profitability. This margin has been under downward pressure in recent years. Data shows that the net interest margin of China's commercial banks has fallen from 2.1% in 2019 to 1.52% in 2024. Some urban commercial banks are seeing margins as low as 1.38%. Wang Yifeng stated, For banks, the ongoing decline in interest rates involves not just deposit rates, but reflects a broader downward trend in the overall interest rate environment. On social media and online forums, many ordinary citizens have voiced concerns over the current economic situation and the safety of their personal wealth.
Please share your thoughts in the comments section below. We will keep reporting on the COVID surge in China, so don't forget to subscribe to our channel and turn on the notification bell to get the latest videos. And thank you for tuning in.